Volume check, volume check. Is this gonna work? It sounds like I can hear it all. Okay, this is a quick live stream, Monday, March 30th, 2026. Thank you for tuning in. This is Beta Heuristics. I am Chris McVitie. This will be a recap of the QQQ Before the Bell episode 6. This is a highly condensed, yet extremely accurate report, I believe. We'll get into it. This was issued earlier today. Is it going to show the exact time? It was before the open. Does it show the exact time? No? Whatever. The report came out with QQQ closing Friday at $562.58. The pre-market Monday low was $557.40, and currently the pre-market was climbing to 567.5. These pre-market levels are really important. I'll show you different technical analysis, and the different technical analysis is the same price action, but different subjective ways of doing similar Fibonacci retracements. The two consecutive trend days have been pushing us lower historically. If you look at the daily chart, we've really accelerated to the downside over the last, the Thursday, Friday of last week was the extreme sell side volatility that we'll get into shortly. Two closes at the low of day. Selling has not stopped over the weekend. Where we stand, the yearly open compared to where we were on Friday's close, we were year to date down 9.27%. Monday's pivot was 566.3. This was the 50% retracement of Friday's full intraday range. This is the midpoint of Friday's intraday range, and it is the simplistic framework for approaching the markets. Is price action breaking, holding above the prior day's midpoint? That is leaning more bullish. If it is rejecting, that is leaning more bearish. That is the simplistic, the bulls need to reclaim and hold above this level, the Monday pivot, 566.3. Even though the pre-market tested $6 below it, the bulls need to reclaim it. Failure to do so keeps the downside extension of $555 to $556 as the primary target. Primary downside target, $555 to $556. Summary, bulls need to reclaim here. It's a bear continuation below, and consolidation. If you can hold that higher low structure above this point and prevent the bear continuation, but you reject those highs, that would be the consolidation scenario. Three quick scenarios. This was the as condensed minute, 2-minute read pre-market report. If you think it is too condensed, it needs charts, it needs more detail, let me know in the comment section down below. I thought trim the fat as much as possible. What are the key levels, the extremes, and the real bias is still bearish. I forgot to really include that the lean has been bearish in every other report. The longer reports here, the fleshing out all of Thursday recap. I meant to do a weekly recap, but I never got around to it. The session summary would lean with bearish at the end of every report. So I don't want viewers to be confused by the sudden volatility in the equity markets. This is highly normal, a controlled sell, and we're hitting our primary targets. Year-to-date chart work isn't very useful as we keep making new year-to-date lows and need to adjust. 555.6 was our low of day. Almost dead center of the area, 555, 556, $555, $556. That was the extreme downside when we look down here. Just, again, you're opening here on a gap up. Relative to where you close Friday, we closed here. We open all the way up here. We're opening 0.87%. At the highs, the market is almost up 1%. On a 3-minute candlestick time frame here, 3-minute, you can see there's a massive top and bottom wick. This is indecision, volatility, the buyers and sellers battling it out for these 3 minutes, and then immediately sellers fill this gap. The sellers want to sell high, buy low, sell high. Where is the low of day? Initially trying to buy here, expecting a high of day retest, does not occur. The gap fills and price action continues to hold lower highs. When we take this retracement, this is our high of day at the time to the low of day. You can see you're testing and rejecting the 50% hold above. You're rejecting 61.8%. You're failing to hold consolidation above 50%. 50%, the midpoint of the intraday range. You're below that, you move back lower. You're consolidating higher lows to break upside. And again, you're holding some consolidation, but immediately pushing back lower. And price action is really just testing, can this point of support hold? It's not holding. We break lower. And you're making a retest, consolidation, you make a break of this low, you have the continuation lower. You test the extension of this intraday range, 557, but where is the low of day? The prior day range is, I think, more useful, and we'll kind of zoom out with this to the 10-minute. So here, again, you're opening within yesterday's range, trying to get above the 61.8, rejecting it, massive 10-minute rejection. You're consolidating here. Lower highs are holding massive top wick, consolidating lower highs versus high of day. Lower highs lead to lower lows, price breaks lower. It is price action giving a leading signal of the direction that we will trend in. Long top wicks holding lower highs versus high of day. Price continues to break lower. You're seeing break on a 10-minute candlestick that continues lower. Where does price continue to? Down to the 55.7573, this $555, $556 area, as communicated. Failure to do so keeps the downside extension 555 to 556 as the primary target. This is our low of day, 555.60. We closed $558.28, and the market is providing volatility. I did not communicate it exactly in the report. I need to include a little volatility section. The estimate for range on the day based on the 10-day sigma deviation for the NASDAQ's close, the QQQ ETF, is a 10-day sigma deviation of $11.5, $12.5. I give you a dollar range. 11, 12, if you're pushing that intraday range, we're seeing here intraday a range of 12 and 12.45, $12.45, 2.1% sell move. Market closed the day down 0.75%. This is how market makers can have a controlled sell-off. You are opening the day above the prior day's close. The market is green on the day. Then the market fails to hold those initial highs of day. The structure breaks lower. There's a consolidation period. It can last the entire day. You can be range bound for a whole week, but eventually the consolidation results in expansion. Today was a very clear break and continuation as you were failing at every point to have a higher low hold and break the lower highs versus high day. This is lower lows breaking, and the The extreme downside target, the primary downside target, whatever you want to call it, is provided. It's free alpha in the report. It's beta heuristics here. I do my best to update the report. No one is giving me any updates, any feedback, so I'm going to continue to try different things, make it more condensed. There will be a volatility section that provides what the estimated range will be and what, if given a expansion of volatility, where might we see range expansion, and if those range expansions then do align with the downside or upside primary targets, that might provide more confluence to traders and more conviction to hold specific trades. This market is providing opportunity to the downside for individuals who are hedging their portfolios with puts and trading the indice ETF NASDAQ QQQ. The weekly, I wanted to review this very quickly because taking the full context into consideration is extremely important. And not the whole context, as in all of the NASDAQ's existence. The current market is everything since the pandemic is most important. More important is 2025 and on. Excuse me. The old chart work I have here, Substack current 2025, this is a little note that tech thrives in low interest rate environment. The 10-year yield was at 4.5%, but above 5% is a potential issue. That's a note, a reminder to myself. We'll check out where the 10-year yield is in a moment. Essentially, 2025, we opened 2025 back here. There was upside, there was immediate downside volatility, there was the Trump war, tariff war with China. This volatility had, from the high to the low, a move of 25%, 25.5% on the NASDAQ QQQ. From the high currently, all-time high, to the low, here the NASDAQ is down 12.7, almost 13%. Halfway there, folks. We're only halfway there. And the point, I would imagine, if buyers are going to step into the market, it would be at a retest of this breakout. We have a all-time high back here that we consolidate beneath. We have this all-time high. We see the volatility from the Trump trade wars. It's perfect timing. This is the start of mid-February, February, end of or mid-April is the low, and then you start to rally. You also have this unfilled gap, by the way. What have we done here? This is in late January, and we've started to sell off. So a few weeks early, if you compare the seasonality of, there's more volatility in the spring months. That's been discussed on the Substack previously with the reports, but the directionality of the months, March being a volatile month to the downside, but where the Ides of March, I believe. So I just wanted to highlight that this market is experiencing well-deserved sell pressure given the tensions in the Strait of Hormuz, given oil I haven't even looked at our oil in a long time, but the volatility to the upside, there's a sweet spot with oil. When it gets too expensive, it can really cause inflation of the price of goods because all goods are transported via some petroleum-based product. And when you're breaking above 120, you're starting to, in my unprofessional opinion, you're starting to hit pain points in the economy. It's starting to bleed over, not just at the pump, but at the grocery store, because the products brought into the grocery store travel via diesel. Pretty self-explanatory. So I don't need to get into crude oil. I'm not going to pretend to be an expert on this commodity. It is complex. It is good to be bullish. And I should be honestly shouting out the individual trader that has been providing me alpha, and that is to be bullish on XOM. And that trader is Miss Izzy. If I go to my Substack, I can't show you the report, but I can show you her profile and encourage you to subscribe here at Miss Izzy Trades on Substack. She is a trader that I would have no hesitation, obviously, to promote. And her analysis is to the penny. That is her slogan. Her accuracy, not just the levels in price, but time-based. That is something that I would love to emulate. This report is a minute read, a 5-minute report at most, condensed pre-market preparation that is inspired by her more professional, highly detailed, immensely accurate, almost to a degree prophetic in the way that it predicts, it lays a roadmap, I should say. It lays a highly accurate roadmap to how price will be trading. So I'm always a supporter of Miss Izzy Trades. And if you want to be interested in trading at a high degree of success, like an institutional trader, a professional trader, full-time trader focused on primarily price action, price and time analysis, as well as sector rotations. Nails sector rotations, is nailing XOM. Let's just look at it year to date. Year to date, folks. I should get rid of this old chart work. Year to date, what is XOM? Open to close. I can't see it. Oh my gosh. Don't do that to me. Okay, we got to give it a little runway. Give it 2 years. Where are we? Nope, nope. This trading day, open to the close, we have 42, 43%. She's been really communicating that this consolidation is going to give expansion, more likely higher expansion. I just realized my big head is in the way. Apologies. The chart is, it's inverse. The chart is breaking to the upside so much I have to move to the other corner. XOM, the consolidation here, likely making a break higher, targeting the 180s, $200 area. I just did that quick retracement, just glancing at that. Based on the prior consolidation, you're holding the higher low consolidation, you're breaking higher highs. Look at the, is that really the max? Wow. Great year to be an investor of ExxonMobil. I just realized I've cut off the chart a little bit. There we go. That's better. So, again, Miss Izzy Trades on Substack. She is the pinnacle. Miss Izzy Trades on Substack. She is the pinnacle of professional day trading for not just price, but time. My mentor used to say that day trading is It is 85% price action interpretation, 15% technical analysis. I've realized that it also requires time, and 100% of the time you are either correct or incorrect based on your ability to time the trade. Timing is the key. And if you have the right level but the wrong time, depending on what trade the derivative, if you're trading an option, you have theta decay. If you're trading futures, you don't. You have different risks based on different investment vehicles, trading vehicles, I should say. These are vehicles for speculation. There's no one better at giving a professional edge in your trading than Miss Izzy Trades. I have been a follower of hers for years, and the more I follow her reports when I have free time to trade, the more successful I am. I am a testament to her success. She's helped me validate my understanding of financial markets, my personal edge based on her professional consistency. There's no one more consistent, more professional than Miss Izzy Trades on Substack. I'll just wrap up. QQQ Before the Bell, episode 6. We had the downside target. That's the only thing. The report is me communicating to the followers the different scenarios, the key levels. I'll get the volatility section in there so that you know what is the 10-day sigma deviation, what can you expect. Maybe range is only half of that in more of a consolidation day. Maybe range is double that on the FOMC rate decision if they decide, hey, we do need to cut rates, even though there's such a perfect storm that cutting interest rates in this environment, while it would be good for risk on assets, if you cut interest rates too quickly, you risk inflation rising. So the Federal Reserve will likely continue to maintain steady rates. The idea of raising rates would be something I imagine the financial markets dislike heavily. So the trade-weighted dollar is on its yearly chart here at the highest point it's been in the year. It's a headline people are making on the financial news year to date. You know, it's in this uptrend. In the 10-year frame, that's better. This is back in 2025 to the low here. So the trade-weighted dollar is attempting to rally, yes. It's yet to really break out of key points of resistance. Above 101.5, when you're breaking above 102, then you're starting to see expansion higher trade-weighted dollar. If the trade-weighted dollar is rallying, that is likely to be a headwind, something that prevents stocks from naturally rising. Let's see where I put this. Oh, we're only 4.3. That's good. I thought we were 4.4%. That's not that bad, said the guy who's in the burning broom. Everything's fine. Everything's fine. Flames. Everything's fine. Diesel can just drops from the ceiling. Everything's fine. No, everything's fine with the 10-year yield being below 4.4, 4.5%. If this thing starts to break above 4.5%, ring the alarm bell. Sound the alarm. Danger, 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 danger. If we are breaking above 4.5%, trade-weighted dollar rallying higher, those are two headwinds to the stock market. Your investment portfolio, a paper 401k millionaire, you're a millionaire on paper, not with hard assets. And if those paper assets decline in price, the heck? Did that just disappear? Let, I don't want to do this right now. I don't want to struggle with the machine because it decides that I can't add a price alert. I guess it is yield, so maybe price alerts don't work on yields. I'm tired of this. I don't have time for this nonsense. 10-year yield above 4.4, 4.5%. I start to do my Chicken Little, the sky's falling interpretation. I go, the sky is falling. I slam my hands on the desk. I scream the F word. I say, hedge the portfolio, folks. You got to hedge. You have to, if you are not hedging your portfolio appropriately, if your financial advisor is just telling you to sit through the volatility, tell them to sit on a thumb because they're not doing you their due diligence. They're not doing you the damn worth that you're paying them. You need to balance a portfolio. If you see risk on, if you see the warning signs, you see the flashing red lights, buy a put. Put a put position on. Buy a short hedge. Puts gain when the market declines in price. If you have shares, lots of shares because you work at a company and you buy shares of that company, you then want to buy puts of that company. So as the company declines with the broader market, then your puts gain in value. It offsets the losses on the shares. So it's not this, oh, how do you balance a portfolio? Oh my gosh, you might have a little volatility VIX hedge if you are feeling spicy. I don't know your flavor and taste of risk profile. Do you, king or queen? Go off. But you need to at least understand options and hedging a portfolio. If you don't, if your financial advisor is not educating you on it, is not bringing that as a discussion, if you don't have the capital to put to work to hedge the portfolio, I understand. But some individuals who have capital to work, who have positions they've sat in, the boomer class needs to learn to sell the stocks. Sell the stock or sell a half of it and buy a put. Yes, you're going to pay capital gains on it. I'm sorry. I'm sorry the stocks you've owned since 1990 are going to be sold in the big 2026 for a whopping 10,000% gain. I'm sorry you got to pay the capital gains on that. But it is what it is. Realizing the capital gains, you pay the taxes on it. So it's better than watching as the asset declines in price. The broader markets see more headwinds than tailwinds right now. We've only seen declines year to date. Where's my year to date chart? I'm going blind, folks. It's just daily. I think the other chart is actually worth more. I think just staying focused on this, because the next point of support on the NASDAQ to me is really this back up there. You can see here there's this prior breakout area that I would think would be back tested. And if the buyers can defend this, then we would spend Q2, Q3 retracing back in this, and then Q4 maybe attempting to make all-time highs. If the buyers are unable to defend this area, this area here is, I would say, pretty important. So at the extreme, you're breaking below $550.20. You're breaking below $540. You're breaking into $533, $532 per share on the QQQ. This is where you're back testing prior breakout points. This candle specifically. the open to the close, that 50%, 537 and a half, that would be an area that I imagine it is the midpoint of the breakout. Just remove everything else. This is the midpoint. This at one point was a new all-time high in the NASDAQ. This new all-time high has never been back-tested. The midpoint here has never been back-tested. So wouldn't it be a great opportunity now for the buyers to... The only way the buyers make this move lower stop is to have either catalyst, the end of the war, some positive catalyst that moves price in a faster move, squeezes the late sellers. The people that are continuing to sell, despite the market being down almost 10% on the NASDAQ year to date, the last sellers would have to be squeezed out of their position for the lows to really be established and for the buyers to start to, you would see an impulsive move higher and then a back test lower. You hold the higher low structure and then you start to break upside. It's what we've done historically. It's never in one day you have a 3% move. It takes the span of 2 or 3 months to make a 3-4% move. So this gap has been left unfilled on the extreme, which has been talked about in prior recordings, which would be a further decline of 12%. We're already down nearly 10%, so we're halfway to a bear market, folks. Are you tired of winning, ladies and gentlemen? Ladies and gentlemen. Ladies and gentlemen, are you tired of winning? I'm not tired of winning. I am so not tired of winning. I could win all day. I could win the win. I could be the winningest most winner. Wouldn't you want to win? Wouldn't it? Winning is wonderful. Wouldn't you agree? Okay, I've done enough. It's very cringe. It's very bad. Not good. Not good. NASDAQ moving lower. Let's talk about Bitcoin before I call this quits, before I embarrass myself anymore on this live stream. I'm behind in my work and I can't do this forever. This is, well, I didn't mean to do that. This is Bitcoin and it is a shitter. The more I talk negatively about her, the better she does. The more positive I talk about her, the worse she does. So she's kind of, a reverse psychology kind of gal. You gotta talk smack to Bitcoin to make it go up. I don't make the rules, I just follow them, folks. Oh shit, battery saver's on. All right, Bitcoin, we're in a bear market under 71,000. I don't need to explain it any further. The Thinkorswim price isn't the exact price because it starts on the second day of the year instead of, they keep doing this where it doesn't, give me the year to date already. Bastards, they keep changing this. Give me the original Google. This AI bullshit is unnecessary. It's disgusting. It doesn't tell me what we are down year to date. Where's the percent for what we are year to date? That's all I give a shit about. You motherfuckers. Fucking Google. They have to go and ruin a good thing. Everything has to be ruined. You need an update for everything. It's fucking bullshit. Unbelievable. Just take a good thing and fuck it up beyond all repair. You foobarred Google. How do you fuck up Google? How the fuck did you fuck up Google? It was perfect. It was perfect. And you fucked up Google. Google. Are you kidding me? What?
I can't understand this actually right now. I'm gonna crash the fuck out. What the fuck is that? What is with this AI bullshit? I don't need an AI summary when I look up Bitcoin price. Tell me the price. Tell me the price. Whoever at Google needs to hear this, stop fucking up the platform. Just put it back. Put it back. What happened? This is garbage. This is garbage. I'm going to devote the entire live stream to this now out of spite for Google. Quantum computing my ass. What happened to... I don't want all this. I just wanted what the year-to-date price percent is. I just... They fucked up Google, man. How do you fuck up a good thing so badly it's beyond all repair? I should just be able to look up Google. You just go to Google Bitcoin price and it should be there. It should be the chart that shows you click year-to-date price and it tells you the percent. I don't know why this AI bullshit is this way. Works on mobile. I don't know why mobile is better than desktop now. Thanks a lot, Google. Unbelievable. Alphabet. Tell you the ABC is a fuck. I shouldn't say any of this with Miss Izzy. Miss Izzy's lovely. She's the best. Subscribe to Miss Izzy's Substack. She is amazing. Miss Izzy's the best. Best full-time trader focused primarily on price and time analysis as well as sector rotation. She's the best. She talked about XOM, crude oil, going higher because of the conflict. She's very good. Subscribe to her. Subscribe to Beta Heuristics on Substack if you would like the Before the Bell pre-market report that comes to your email before the market opens. It's free alpha. I tell you where the downside target, the upside target is. Market gravitates to one of the two often, or it doesn't. Often it does, but, you know, past results not guaranteed, future results, yada, yada. You got the drift. You want to subscribe or don't. It's free. So I love you if you do. If you don't, I love you still. Have a great day. Stay out of trouble, folks. The main risk, again, real quickly, main risk is if we see risk on assets fall. We're seeing Bitcoin in a bear market. We're seeing NASDAQ halfway there. We're seeing 10-year yield below 4.4%. That's good. If it starts rising above that, that's bad. If the trade-weighted dollar rises as well as the 10-year yield, then it's, double alarms. Hedge your portfolio accordingly. Leave a comment down below like this. Crash out daily, folks. I love you. Stay green. Until the next recording.